Is this time different for Bitcoin? Will Bitcoin top earlier than expected? Well, in light of the abnormal BTC price behavior in the recent weeks, some onlookers, some analysts believe that in this cycle, the Bitcoin bull market top could come a lot earlier than usual, earlier than late 25, maybe even late 24. Does this mean our selling plans are going to go out the window? Well, let's get to grips with the exciting new situation and investigate this theory, and also look at a promising indicator that could give us a clue on when to sell. It does have very high historical accuracy, by the way. So let's get it. Previous Bitcoin cycles have run almost like clockwork so far. Looking at how much time it takes to break the previous all-time high, we see 25 and 23 months respectively. But this time, it appears that the cycle is acting differently. And I'll come back to the likely reason for that in a minute. We're only 16 months after the November 2021 69K all-time high and have already been kissing it just a little bit, although we haven't had a big conclusive breakthrough at the time of recording this video. That mega monster candle, maybe by the time you watch this, we will have had, assuming, of course, that it's not going to be just up forever and that there will come a bear market at some point. In that scenario, when can we expect the top of this bull market? Well, in previous cycles, the top came roughly 500 days after the Bitcoin halving. Translated to the current cycle, this would put us roughly September 2025 for the bull market top. The pressing question now becomes, if the new all-time high has come ahead of schedule, then will the bull market peak also come ahead of schedule? If so, this would make the current cycle an accelerated cycle, or a left-handed cycle, with an earlier peak than tradition would have it, and earlier than most people would anticipate, thus catching most of the market with their pants down. The first real sign of the current acceleration we saw in mid-February, when BTC blew past a level that in previous cycles has acted as a multi-month resistance level. This was the level around $48,000, which is the 0.618 Fibonacci level on the scale from the bull market top to the bear market low. In previous cycles, it has taken quite a while after the halving to break this 0.618 level. Markets have traditionally wrestled with it half a year or longer post Bitcoin halving, but not now. This time, it really is different, at least for that. But what is causing the mania? What's causing us to break everything? It's no secret, of course, that the catalyst to the current streak of 6 green monthly candles in a row has been the launch of the spot Bitcoin ETF. BlackRock, Fidelity, and all the other Wall Street goons getting in on the party. Their volume and net inflows have beaten expectations of even the most bullish predictors. The ETF floodgates of demand from TradFi sources have been open and have overwhelmed the market, often seeing 10, even sometimes 13, 14x the daily amount of Bitcoin produced by miners being sucked up by Wall Street. The diamond-handed hodlers scorched in the fire of a brutal bear market. Well, they're not so eager to sell their coins. In fact, most coins haven't moved in over a year on chain. Not at these prices, at least they're not selling. Of course, the upcoming Bitcoin halving in April will only add fuel to this fire. Could the ETF break the normal cycle? Well, to an extent, it already has. But what is a normal cycle? A normal cycle is 1 year bear market, then 3 years up. The previous all-time high tends to be breached around the midpoint of the cycles, essentially. Now, when we see the speculative frenzy coming at the end of a bull market, sometimes the blow-off top ending roughly 500 days post-halving, that's when a lot of that money on-chain is going to move and start selling. Now, bear with me for a second here, or should I say, bull with me, by assuming that we're in an accelerated cycle, supposedly that we will conclusively break all-time highs very soon, and from there rip on just like in the last cycle, but a left translated time schedule. So if you superimpose last cycle's chart from breaching all-time high over the current one, you're going to see that it would mean a $200,000 plus Bitcoin coming as soon as August, a violent run-up, after which the party would be largely over. Get your Uber, go home, or stay until you wake up in your own vomit. Either way, we could see a 2-year long bear market, or at least sluggish action towards a new bottom after that happens. This would mean a thing or two for our selling plan. Obviously, before I get into that, I must talk about some misunderstandings about the whole idea of an accelerated cycle theory anyway. But before I do that, let me interrupt the flow real quick to let you know about the best damn newsletter in the cryptocurrency business. That is my newsletter, the Wealth Mastery newsletter. Every week, we are bringing you the latest, greatest money-making opportunities and insights in the market. We're covering airdrops, altcoin news, deep dives in altcoins, NFTs, technical analysis, everything that you need packaged in a nice email in your inbox. You can join our 100,000 plus weekly readers getting that alpha delivered to your inbox by signing up for free using the link down below in the description. Thank you very much. Now back to the show. So some argue that an accelerated cycle would imply an aggressive run-up earlier than usual in the cycle, and that's the example that I just gave. But to be clear, an accelerated cycle can also have a non-aggressive increase. Remember, nobody's got a crystal ball. Nobody can predict the future here. All it means is that the top is left of the usual cycle top. Also, it certainly does not mean that the cycle will be shorter. That is precisely the nasty thing about a left translated cycle. If it is the same length and the top is before the middle, then chances are the bottom is lower than the previous bottom, which is very problematic, a failed cycle, so to speak. To be sure, the moment at which we break the all-time high says nothing at all about the translation of the cycle. The fact that we are breaking all-time highs earlier than expected before a Bitcoin halving could still imply a very bullish scenario in which we still would have a relatively normal, or even, get this, a right translated cycle, or a slower cycle that goes for longer than people expect. Just a few things to keep in mind before you get too nervous. Remember that this is only one scenario out of many. We could also have a right translated cycle topping only in 2026, right? How crazy would that be? That'd screw a lot of people up. Everybody's here waiting to sell in 2025, and then they sell, and then 2026 when we get our top. The point of all this is to say that you should be prepared for any scenario, make your plans accordingly. Some people will argue very passionately that this is the way or that's the way. We should make our own decisions. We need to be ready for any scenario to play out in the markets here. So far, we have talked about time as a predictor for the top, but of course, there are many others. Now, Rect Capital shared this interesting chart the other day. He writes, of course, the technical analysis for our Wealth Mastery newsletter. And that's, of course, looking at the pi cycle top indicator, a chart pattern, or an indicator we talk about a lot. The cycle top indicator tracks two moving averages. Historically, the point in a bull market when the faster moving average, the yellow line, caught up with the 2x multiple of a slower moving average, the green line, we were quite close to a market top. Last time it flashed the signal 3 or 4 days before the actual market top for Bitcoin. So keep all that in mind. Definitely an indicator to keep an eye on. Here's a chart of where the pi cycle moving averages are now. And check this out. They're converging again, and they're on a collision course currently scheduled for around November 2024. Of course, if and when they collide, depending on the price action. In the meantime, very aggressive price action happens sooner. Muted price action takes longer. It's only a rough guesstimate, this projection. If price action continues like it has done in recent months, then we could expect the indicator to flash before the summer of 2025, which will screw everybody up. It may make this an unreliable indicator in this cycle. If this all feels very uncertain, well, it's because it is. There are no guarantees in investing. There's no guarantees in markets, no guarantees in charts and predictions. And as investors, we just have to embrace all of this. Still, we are not totally in the dark here. When in doubt, again, zoom out. Take a look at the model that has held up pretty damn well since the first days of BTC ever even had a price, and that is the Bitcoin Power Law corridor. The price has over all these years hovered within the lower and top bands. Given the model's wide margins, we can sort of safely assume that the price of Bitcoin in January 2025, for example, is going to be anywhere between $35,000 and $380,000. Wow, Lark, thanks for the alpha here, buddy. Look, but seriously, circling back to the question we started this video with, we can say that the accelerated cycle as an outcome has become more likely than, let's say, a year ago. Before all the ETFs and all that stuff were on the horizon, we weren't even having this conversation. But an accelerated cycle is by no means the only outcome here, or even the base case yet. So what about your selling plan? Assuming, of course, you were even planning to sell any Bitcoin this cycle, should you change your plan? Also, note, of course, that when Bitcoin does top, the following 2 to 4 weeks will be the best last chance to get rid of all those altcoin bags for max profits before the bear market sets in. Anyway, all this depends on if your plan hinged on a time schedule for selling your Bitcoin. Anyway, for example, your plan might have been to dollar cost average out just 5% every month during 24 months straight, or the 18 months after we cross new highs, whatever it might be. That might be a less optimal strategy in the case of an accelerated cycle where the market's top in August, in which case you might want to take more profit earlier. So these are all considerations to start thinking about. But if you're just feeling utterly confused by all the possible scenarios, and I get it, I feel you, okay, there is a way out. Simply forget about time and only look at maybe price targets or certain indicators that can help really try to put it all together. Dollar cost averaging at certain price points out of the market, for example, could be an interesting way to do it. After Bitcoin hits 100K, start selling 5% a week or whatever. You can use the Pi cycle top indicator as a signal to start scaling out. Here's another indicator that has been pretty useful in the past. That's the MVRVZ score. When the MVRVZ score reaches values similar to previous blow-off tops, as you can see on the chart here, then you will know enough is enough and that the market is likely cooked. And then, of course, there's all the usual less definitive stuff, the social signals, your high school friend getting in touch again, asking how to buy dog coins. You got the Coinbase app hitting the top 3 in the App Store, et cetera, stuff we talk about all the time. You'll know enough, regardless of all the calendar date stuff and the theories and whether it's early or regular or late. Pay attention. Just remember, be a bit dispassionate here. Act on the signs when you see them, because the signs will be there. And they'll be super obvious in the bear market in hindsight, but try not to have bear market hindsight. Try to be in the moment and realize the signs in front of you when they're happening and pay attention to them. The signals will be there. You just have to listen. Thanks for watching.